Righty-ho folks, Cam Hawkins here from Trading Nut. Now we've got today a very sort of special kind of bonus, if you want to call it something, a bonus video here in the Smart Money Concept series. It is being, it's number 2, but it is a bonus. So it's not necessarily direct education. This is even better than that, really. You're going to get 15 trades that Nathan Jester and the team at Ariel Fx took over the past week. So you're going to see how those trades all played out, what they were and why they got in and where they got in. So it's great if you're looking to educate yourself on smart money concept or even just how the market moves in general, then this video and this piece of content is going to be exactly what you need. So without further ado, let's get on with it. Righty-ho folks, I'd like to introduce you to something new here on the Trading Nut channel. It's the Trading Nut Funded Cup, sponsored by City Traders Imperium Funded Trader Program. You can win almost $200,000 worth of prizes. That's for the top 10 winners, and the top prize takes away a $100,000 funded account with City Traders Imperium. Folks, if you want to register for this and show your skills as a trader, click on the link above or the link below the video or in the podcast description, then sign up for free before the 15th of April 2022 and get 10% off any City Traders Imperium funded challenge just for entering the competition. Good luck folks, and we'll see you in the cup.
Hello ladies and gentlemen, I hope you all are doing well and had a phenomenal trading week last week. I hope that you guys are able to get some rest this weekend and come prepared for this upcoming trading week. We are going to absolutely kill it again like we did this past week. I want to create a little trade breakdown for you because there were a significant amount of opportunities the market presented to us this past week. I believe we had over 15 trades that were sent out. Normally we try to average between 4 to 8 trades per week, but this week just presented so many different opportunities. We had to take advantage of all of them. It met all of our rules, and we followed our trading plan to precision, and we ended up with a grand total of about 24% return for the week. So I'm going to be going over every single trade that we sent out, whether it hit or not, and whether it hit stop loss or went into profit. All right, I want this to be fully transparent to you guys. So from A to Z, from the beginning of the week to the end of the week, every single trade that we sent to our VIP community, I want to discuss. And let's see why, some of the trades that we did lose or that we did not get our fill on, let's see why that occurred. All right, so let's first start off by talking about Chef JPY. This is our first trade of the week. This one actually missed our entry. So we had our entry at 127.771. The reason for that, and while I'm not going to do a full top-down analysis on all these pairs, that would take way too long. But we are in an uptrend on Swiss franc Japanese yen. All right, Japanese yen has been extremely weak over the past few weeks, and just continuing with the overall momentum and direction that this trend is providing, we will take advantage of any slight pullback the market provides for us. All right, so we had our original position at 127.771. This was our last point of demand that swept liquidity, all right, from Asian session. So coming into London session, we had our Asian session sweep, our sell to buy, continuing with the overall trend, strong momentum back to the upside. We were consolidating around. I figured we're building liquidity prior for another expansionary move to the upside. So I figured we would pull back into our last point of demand and then continue. Now we stopped at around 127.83. Now, sometimes price doesn't come down all the way into our demand level that we were expecting it to when momentum is taking over this whole trend. Especially when we are just in a trickle-like state to the upside, we don't always get full pullbacks, all right? So the momentum is quite strong right now, which is why we didn't get our pullback. We, more or less came into imbalance within this move here that originally broke out of structure again. So the imbalance was filled. We didn't quite come back down into demand like we were hoping for, but nonetheless, the concept is there. The sweep of liquidity from Asian session into London session, expansionary move coming into New York session, consolidation, New York session, liquidity run, just didn't come into our entry. Unfortunate, would have hit us for a 1 to 5, 1 to 4.92, but nonetheless, still our analysis was on point, just didn't get that entry. and we move on to the next trade. So Canadian dollar, Japanese yen, we had quite a few trades this week with this pair. I'm going to first start off by talking about the first. This one really sort of ticked me off because it missed by just a fraction of a pip. So just like Swiss franc, Japanese yen, we are looking to short the yen. So buying Canadian dollar, Japanese yen. The Canadian dollar is so strong. Pairing that with a weak currency like the yen, you can only look for buys here. I mean, we've been trickling up forever, since probably the beginning of March. Hardly any sort of pullback, just in a trickle-like state, low resistance liquidity. And what we found on Monday morning in New York session was this liquidity run from London session. We had the consolidation during London. We had the fake breakout, all right, sweeping London highs, and then having that sell-off. All right, so sweep of the London high, sell off, and then buy back upward. An overall uptrend, we should be looking for longs. So we actually not only swept this liquidity from London, but swept this liquidity from Asian session the prior day. So this last New York session sell to buy provided us with that liquidity run and the continuation of trend for further upside. So what we were looking for was just a simple counter trend breakup structure to confirm. We saw the liquidity run. We saw the shift back to the buyers. We wanted to pull back into discount, back into prior demand. So this is our last point of selling before the buying. And we had our imbalance here as well with this candle. So we were looking at placing our entry at 94.5450, and that was the imbalance fill here, actually the 50% from this wick to this wick, and the demand zone, the first part of the demand where we originally sold to buy. All right, we did not get that fill here. It came just about 1 or 2 pips away. So unfortunate there, then we just kind of continued up. And if that just would have come down a little bit more, we would have hit for about 1 to 2.5 risk to reward. So still, it's Monday, nothing so far. We're still sitting at 0. All right, moving on. Euro USD. Again, we have many Euro USD positions here. The first position on Monday was a winner for us, actually. Our first trade that actually hit our entry, and this one moved into nice profit for us. So let me first start off by talking about what we're seeing on the 1 hour time frame. So semi-higher time frame, we accumulated in price around a key psychological level of 1.08. This is a key psychological level. 1.08, 1.10, and 1.12 are key levels for this pair. We just zoom out a little bit, we can see that we came into, let's go to the 4 hour, we came into an area of accumulation. This was back in 2020 when we had the major sell-off and then the rally. So we were originally trickling down from here. We were trickling down. We were in a bearish market. We had our fake out and then another fake out here for continuation with the overall trend. We came into accumulation within this level. This was the low in the market, and then we finally had a bullish run all the way up. So now we were just simply in a pullback phase. We accumulated at that level around 1.08 and then had an expansionary move from that level. We could have easily bought it somewhere in here. However, technically, we were still in a downtrend within this current trend here. And I figured, we could potentially be coming into 1.07 further into the accumulation schematic that I just showed you to the left. But after we have seen this rally again, 1 drive, pullback, 2 drive, now we're looking at a pullback, 3 drive, 3rd drive into the upside, into premium price around 1.12, which is actually at this previous supply level, and we have to fill the gap here as well. So highest probability trend continuations are with that 3rd drive into the upside. However, this trade that I'm currently going over with you is a counter trend trade. The only way I trade counter trend is if the counter trend is still providing further, in this case, downside continuations before coming into an overall demand level to then continue with the overall trend, if that makes sense. So let's go down into the 15-minute, and I'll show you what's going on within this level. So having an understanding already that price swept liquidity on the 16th of March, okay? We actually swept ascending liquidity here, creating this sell to buy within this expansionary move. This was the level in which the market makers are going to come to throughout the week. And we actually did hit that, I think, on Wednesday. But this trade was sent out Monday.
Hey folks, with so many crypto exchanges to choose from, why not choose the best one for you? And here are 3 massive reasons why my sponsors BitGet are the perfect choice for traders. Number 1, they're ranked among the top 10 largest crypto exchanges for derivatives trading, which is pretty good, right? Number 2, they've got a trading competition that gives you a chance to win a heap of Bitcoin. So if you haven't got any Bitcoin, great way to get some. Number 3, their copy trading platform not only allows you to follow profitable traders, but you could earn crypto by letting others copy your trades too. So to get involved, click the link in the description below or in the card above, and then follow the 4 steps and you're going to get over $150 in rewards.
So we figured, okay, well, we have more room to go to the downside. Price is continuing to go short, just like I said in Smart Money Sundays. Short-term buys on the dollar, long-term sells. Meaning for Euro USD, short-term sells on the dollar, or on Euro USD, long-term buys. So before coming back down into this level, I wanted to see further, downside continuation. We had a setup that occurred on the 21st. That was Monday. If I go down to the 3-minute time frame and scroll over, we can see here that we were forming descending liquidity. Descending liquidity we needed to run before another move to the downside occurred. We had a 3-minute supply zone. I didn't trade it off this level because this is not a clear supply zone level. But nonetheless, we reacted from the level and then broke structure. So we closed below this low after sweeping this liquidity here. You see the descending liquidity. We fell, created that lower low, and now we were in for our setup. So the law of effort states that when momentum is very strong to one direction, and a pullback is very weak in the opposite direction, usually you will subsequently follow, the momentum originally. Meaning, we were very strong in pushing down our overall lower time frame trend. Very weak trickle-like state back to the upside gives us that opportunity for another strong move back down to the downside for a continuation of the overall momentum. Also, it was ascending liquidity here. We can see, we sell side liquidity and all these lows. So we identified this level right in here to be intermediate supply. Okay, so we took this off of 1.10516, and the 50% of that region also happened to line up with, I'm just going to delete this, lined up with the 1 hour, over here, the 1 hour imbalance fill. If I just move this over here and just adjust price, 6. 1 hour imbalance fill with this 1, 2, 3 pin pattern, doji candle engulfing formation. And then we kind of did the same here, starting to slow down, and then we had our engulfing candlesticks, which further, confirmed the sells for us as well. So very nice wick entry, had 0 drawdown, and this was more of an intraday type play. The reason why I have take profit at this specific level, not only is it a psychological level 1.100, but also it took liquidity here, and it's starting to come into our last sort of selling volume before the buy. So I didn't know that it was going to come this far down into it. However, I did know that we were not going to breach this level this week for the most part. Obviously nothing's 100% guaranteed, but I had a high probability understanding of the fact that it probably wouldn't breach. Because of what was going on in price action here and the overall structure of the market. So nonetheless, we had 1 to 2.72 risk reward, so 2.7% return. And all of this, and I forgot to show you guys before, all of this is shown within our trade ideas. I can even just start from the beginning of this week really quickly. So the beginning of the week was the 21st, and our first trade, bear with me here, guys. Trying to give you a little more transparency in our VIP service. This was the 17th, 18th. Okay, yeah, so this was the first trade I talked about. Chef JPY, parameters there, analysis there. CAD JPY, parameters, analysis. We do video analysis as well. This was the EU sell limit that we had. And then I'm going to be talking about the other limit orders as we go throughout the week. So USD Chef, we had let's just see, EU, CJ, keep going. Analysis, GBP Chef, another Euro USD position, 2 more on that. Euro AUD, another CAD-J position, USD Chef again, USD CAD again, gold. Let's see, keep going. CAD-JPY again. Yes, a lot of CAD-JPY trades. I think we had like 3 or 4. Euro NZD position. Keep going. AUD CAD position. Another USD Chef. Another USD CAD. Another Euro NZD position. Another Euro USD position. And I think that was. I think we had one more maybe down here. Yep. And then our last trade on Friday was gold. Okay, cool. So those are all of the trades that we send out. And now I'm going to be going back over these pairs. So Euro USD, just talked about that, 2.72% return on that. USD Chef. So USD Chef, this was our first loss of the week. Maybe we only had about 2 losses, if that. The reason for this is that understanding that USD Chef is currently still in an uptrend here. We had that higher high, higher low, higher high again, looking for higher low. We want to get back down into discounted regions of price. This is our final, last point of demand before the expansionary move. We have equal lows. I was just looking for continuations with the trend here. Even though this was counter trend, it still provided me the opportunity to sell this pair because not only what I'm going to be showing you in a minute, but because we have more room to go to the downside and liquidity that we should be taking. And that's exactly where it lines up with 9250, and that's exactly where we should be coming into next week. So this trade took place on the imbalance fill. It was just a simple, continuation with the trend. Happened to line up with so time and price. Excuse me. We can see that this was London Open, buy to sell. We came into the supply level, engulf, right back to the downside, created that lower low, pulled back into the inefficiency and the sponsored candle move. But unfortunately, we didn't get the reaction we wanted to, and we ended up hitting stop loss on this for a 1% loss. So that was a 1% loss there. Price actually did come up, and we took this liquidity here, and we came into, I think, like a 5-minute buy to sell that swept liquidity, descending liquidity right in here, come up into that supply, and then we made our move. Lower low, lower high, lower low again, and now I'll be talking about these entries here in a little bit. So the next one on Tuesday, our next trade was GBP Chef. So GBP Chef was a beautiful trade that actually did hit stop loss. And I'm actually excited to go over this with you because this is a perfect example of why you can have so many confluences in your trading, but yet still lose, which really, sort of enrages people and, prompts people to quit trading because they're thinking that they're doing everything right, but yet they still lose. And that's just a part of the game sometimes. You have to be able to manage your emotions in trading. And your psychology has to be very, very good, to say the least. So we're just going to be continuing with overall trend here. We're making lower lows, lower highs. We can see here our last point of supply here after the lower low was formed. We came up into that supply there with a clear buy to sell. The gap was filled. And if we move all the way over to the right here, we came into that level, sweeping liquidity, made that lower low, lower high, coming into that buy to sell. So I thought this was valid, not just because we moved away from this level and we created our last buy to sell. Sometimes even if you understand structure, this buy to sell may not be valid, even though we had a very strong move away from it and a lower low was formed. Yes, you could consider it valid. However, what made it valid for me was not only because of what I just said, but because this supply level came into a supply level that came into a supply level. I actually came into a sponsored candle move. Quick move to the upside, quick move to the downside, overall move. And we were looking for further Swiss franc buys because we were looking for Swiss franc Japanese yen to go long. So GBP Chef to go short. So we made that lower low, not overall lower low in the market. So maybe that's why technically we didn't win this trade, because we didn't make a lower low overall compared to this low before pulling back. Maybe it just needed one more liquidity run back up further into this supply level. So we did lose this trade. It just ticked our stop loss, and then would have hit our take profit 1 and take profit 2 at 1.22. But nonetheless, I thought this was a very good trade. It was our last buying pressure before the sell-off. The selling volume was very strong and violent, and it was part of the imbalance fill as well. Had a little bit of a reaction, but unfortunately, we lost that trade. So another minus 1% there. But then we had GBP CAD. GBP CAD was another one that almost hit stop loss but didn't. So this was very similar to GBP Chef. Man, I've just been talking about so many pairs. It was very similar to GBP Chef in the sense that we are in a downtrend. Canadian dollar is very strong, so we want GBP CAD sells. We had descending liquidity that was run buy to sell that came into this imbalance right here. This was imbalance. Also, the last buying volume before the sell-off that swept liquidity here and actually came into a 15-minute supply level. I'll just show you quickly. Sorry, guys, I'm going really quickly. I have a lot of pairs to go over. Supply zone here came up into nicely, and we can see our last buy to sell. Intermediate supply, also 1 hour time frame inefficiency fill. Descending liquidity, very nice. Run on that liquidity. New York session time and price, violent move back to the downside. So I thought this was a beautiful level to play off of. We actually formed this. This is exactly what I love, guys. I love when price forms liquidity prior to coming into a sponsor candle move. So it just really confirms that entry for me and gives me conviction that this will go short from that level. We came up into that level after making that lower low. So the structure is still short. Lower low, looking for that lower high for another lower low to be formed. That's exactly what we had down here. But we came up into that level, had a little bit of a reaction, then we pushed up very strongly, reacted again, came back down to that break-even level, and then pushed right back up again, sweeping this liquidity, but we didn't take out this high, just missed it by a couple pips, and then we sold off very strongly back to the downside. So we were very fortunate it didn't hit stop loss, but that's why we have good stop loss placement, stop above the prior supply zone and sponsor candle high, and that's probably why we didn't come into it. But was very close, but we were fortunate enough to hit our TP1 and our TP2 here, and then subsequently our take profit. And this was not take profit 3. So I don't know why, guys. If you guys are having the same issue as me, sometimes when I move price around here, I go like this, and then I leave it, and then I move it back down to the overall price position. Sometimes when I refresh the page, it'll come back to something I moved up here. If that makes sense. I don't know why it doesn't. I think overall take profit was 6.4 because 6.5 was TP2. Right, that's correct. So we should be hitting overall take profit come this week. But up on this, we're currently floating 3.75% on this one. So very nice trade. Euro USD is the next one. So we already talked about this sell, but now we're looking for the buys because we did come further into the demand that we just talked about earlier. So now we're looking for that overall higher high to be formed. All right, we had the reaction from our 5-minute demand zone. I'm not going to go into all the little tiny details here because I have a lot to go over. But reaction from that level, and you can see here, go down to the 5-minute. Go down to the 5-minute. We're starting to slow down in price. This is our last point of demand. Actually, this is our last point of demand. But I didn't think we would trickle all the way back down into here. We actually did, which I'll talk about in a little bit. But I didn't think that was going to be the case. I figured, at least into this overall last sell to buy, but maybe a little bit into this intermediate demand zone here, just like we had an intermediate demand, supply zone here on the sells. So had 2 entries here, 1.0986, which is right here, and 1.0978. We broke counter trend structure, confirmed the longs for me. Didn't quite pull back into that level, just provided more opportunity to buy at this level when taking liquidity when we finally come back down, which is exactly what we did. So ended up forming, again, descending liquidity here, more drawn liquidity to be taken later, and we push all the way back down. We actually came a lot further than I expected, had a reaction from here and here initially, had one last run, sell to buy. Our 5-minute newly formed demand actually came into the demand in which I have right here. So nonetheless, we hit our take profit 1 very nicely. After that, we had our expansionary move back to the upside on this time frame, and we broke counter trend structure here. So I actually did send in our hindsight chat. This chat is strictly for analysis. Obviously, this is for our trade ideas. I sent 2 screenshots. One was a buy from this last sell to buy. Obviously, those are just analysis. It doesn't mean to get into a trade. When I send analysis, that doesn't mean this is a signal. Obviously, our signals are posted in the trade ideas chat here. But I had this level going long. We actually did have a reaction from that level. We actually came a little bit further into it, but nonetheless had that expansionary move back to the upside anyways. But we were able to catch another entry from this level here, and I think I'm going to be going over that later just because I want to go in sequential order of the trades that were sent. But nonetheless, the 2 that we were talking about from 8.6 and 7.8 were right here, and take profit 1 was hit on that very nicely. And stops were at break even. Excuse me, they were not at break even. They were below this prior low. I told them, and you can check me on this, VIP members. I told you guys to put stops at 1.0964, which did not come into. So next trade, Euro AUD. Start off with the higher time frames. And the first Euro AUD trade, I think we only had one. It was just a simple continuation. Euro AUD and Euro NZD love to trickle. When they trickle, they trickle. They don't really pull back that often. So we were just in this trickle-like state here. Really from the top, we were just trickling, taking advantage of any little tiny pullback for any continuations. So Euro AUD, extremely bearish. Aussie dollar, extremely strong, which is why we're seeing a complete death on Euro AUD at the moment. But just pulling back into prior supply zones. So you could have done that here. Could have done that here with this supply zone. Could have done that here with this supply zone. Could have done that here with this supply zone. Here, obviously, with this one. This supply zone here. I mean, there's so many opportunities when the market trickles like that. Provides many opportunities and great risk-to-reward trades. So we wanted to come further down into demand here. This is our demand level that we wanted to be met, which is why we had our take profit at 4.7 psychological level for a nice 1 to 3.6 risk-to-reward. So simply put, these 2 doji candles, engulfing candle, pull back into the inefficiency, and go back down to the 15-minute time frame. And we can just see the demand level. Last buy is sell within the move, lower low is formed, trickle back up, and just we tapped our entry to the exact pip. So some people probably didn't get the fill on this, depending on what broker you have. If you have a high spread, low commission broker, you probably didn't get the fill here. I actually did. Because it's funny because I actually forgot to place the limit, and when I came up into that level, I just sold manually. But nonetheless, it came up into it to the pip, and we fell all the way down very swiftly down to our overall take profit at 4.7 for 3.6% gain. Next one, Canadian dollar Japanese yen. This was our second Canadian dollar Japanese yen trade. This one went for 2.9%, or actually I think it was 2.85. 2.89. There we go. So just like Euro AUD, Canadian dollar, Japanese yen was just trickling up. Canadian dollar is so strong, yen is so weak. We're looking to buy this now and twice on Sunday. So that's just a phrase, guys. I don't really mean that. So we had our expansionary move, pull back into our last point of demand here. You could have placed it within this last candle. However, again, going back to that Chef JPY trade, when we're in a trickle-like state, not all the time do we have our full pullbacks. So I understood that, and I learned from the Swiss franc Japanese yen trade and placed our entry at a more appropriate position for the current market condition we are in. So I had an entry at 9.569, and very nice entry, just a tad bit of drawdown, and went all the way back up, hit it to the T, and we had our pullback. Which is where we had another trade, which I'll talk about in a minute, but 2.85 or 2.89%. Let's see. Next one, USD Swiss franc. So obviously we talked about our loss here. This is our loss here on USD Chef. We had another trade right in here. This was our hourly buy to sell candle. So originally I talked about how we swept liquidity here, and then this buy to sell supply zone swept liquidity here. We came further into the supply zone. This was like a 5-minute buy to sell, and then we had a reaction from that. We pulled back up and then sold off again. So 1 drive, 2 drive, looking for that 3rd drive, and then the overall lower low compared to this low. So lower low, lower high, lower low altogether. You see how the market's fractal here, guys. Lower low, lower high, looking for the overall lower low, which is exactly what we got down here. But we also had intermediate structure, lower low, lower high, lower low. So one drive, two drive, look for that third drive, which would make the overall lower low here compared to this low. So let me just get rid of all these markups. Had our entry from the open, buy to sell. There was a little bit of a supply in here, which I recognized after the fact, but nonetheless, had a little bit of drawdown in here, unexpected drawdown, but that's what happens when you have a, quite a, I wouldn't say large, but decent sized sponsor candle move. Again, law of effort, strong, violent momentum, trickle like state back to the upside. It's exactly why we saw another push to the downside. So this was for a 1 to 4.43 risk to reward. And I believe that, yes, this one, I don't think I had stops to break even on this yet at the time, because we can see we did come back up into this break even level, which I identified as another level of distribution and supply. So I don't think I put stops to break even here because I have it as put 1.5%. So with partials taken and the fact that we are currently floating here upon market close, we're currently floating 1.5%. If we were down here, we would be floating a lot more, 2.8 plus, yeah, so 2.8%. But the fact that we pushed it back up into here before market closed with partials being taken and the price currently floating at 93042, up 1.5% on this trade so far. Next one, USD CAD. USD CAD really pushed my buttons here. I guess this was more of a lack of patience for me, something that I'm human. I'm always learning. I'm always, making mistakes too. Sometimes the markets get the best of me sometimes. So what we did see, obviously, USD CAD, massive downtrend. I told you guys short-term dollar strength for long-term dollar weakness. We're seeing the weakness. And now Canadian dollar is very strong. We want to be selling USD CAD. We had our last point of supply, our buy to sell that swept liquidity in here coming into this supply zone. We fell lower low again. I didn't sell it within here. The reason I didn't sell it within here is because we can see the lower low is formed, the lower high and the lower low. I was thinking, okay, well, maybe we're starting to slow down in price. Could we see a reaction from this level? And I was waiting for the reaction, and we just busted right through it. We came into the last point of supply here, buy to sell to the T, essentially, and then we made our lower low to the downside, sweeping this liquidity. So this confirmed the supply zone for me to be actually placing a sell limit. So we placed a sell limit at 1.2603, came a little bit further up into it. We actually took the high of this intermediate supply, coming a little bit further into the overall supply, but nonetheless, stops were at an appropriate position, and we did sell off, making a lower low overall. All right. Unfortunately, I did say to close at break even here. I was just really impatient, and I didn't feel as if this trade was going to play out just because it was after 12 o'clock Eastern, so noon. This was after London session closed, and after about 11 to 12, Eastern Standard Time, around lunchtime for me, this is when New York session becomes a little tricky, and continuations from New York session are not as highly probable. Meaning, if this occurred, 8 or 9 o'clock, I would have kept this position open. But the fact that we were during lunchtime, volume starts to diminish. I thought it was best to just close the position at break even right in here, which I did. But overall, it ended up continuing, and it actually hit our overall take profit. If we had have held, we would have made 4.9% return. So unfortunate, but we move on. The next one, Canadian dollar, Japanese yen. Again, this was on the 23rd, so I believe that was Wednesday. And this one was 95.83. So this entry here. So again, just continuations with this trend, looking to play off of each demand zone level here. We can see the reaction. The reason why I place stop below this level is because sometimes when we are in a trickle-like state, if we do get that overall pullback into our most recent demand zone, sometimes we sweep the prior low liquidity and then come into something else like this. So this was the deciding factor on whether I should put stops here or here. And that was the reason why I put stops here instead of here. Unfortunately, we didn't, I guess, in hindsight, we didn't need the stop to be here. But if this setup happened again, I would definitely place a stop here again. It just so happened that we reacted from our most recent demand and then went long all the way up into 97, which provided a nice 2.85% return on this trade. So very nice. Sometimes it's very nice to leave runners open, especially when we're in a trickle-like state here, like we are in CAD-J and Chef-J and EN and EA and stuff like that. Have your overall take profit level, but keep a runner open just in case we just do continue like this. But even if you did close at this level, which I did, 2.85%. Going to the 24th, this was Thursday, AUD CAD. AUD CAD was a very good trade in my opinion, just because we are in an uptrend overall, and this is really just an intraday type of trade, not really a swing trade, only for a 1 to 5. We can see here that price coming into this demand zone swept ascending liquidity, and here sell to buy coming into demand, creating the newfound demand zone level. Higher high was formed, pull back into that same demand that swept liquidity. That's why I love these levels. I just didn't see this in time. I don't really trade AUD CAD, so by the time I actually did look at this pair, we were already over here. But in hindsight, you could have entered here. Very nice trade, higher high, higher low again. Look at that. Our last sell to buy, I think this was maybe 5 minutes. Let's check it out. Exactly what it was. Our last sell to buy, imbalance fill as well. That came further into a little bit of imbalance in here, but higher high, trickle down, higher low. Now we wanted to play off of this level here, which is our last sell to buy that broke counter trend structure. We formed a lot of equal lows, a lot of liquidity. We actually had another run of the high again, but nonetheless, we came back down. Came back down into our entry at 93.988. Imbalance fill as well. Last point of demand. We had a very nice reaction. Hit TP1. We secured some partials. Move stop. I think it was I moved stop below this level here. So 93.95, I believe I put stop just in case. I thought that if we were going to come down and take this low again, it could potentially just run this low too, which is exactly what it did. So it didn't hit overall stop because we did put stop right below this low. So we took partials off the table after TP1 was hit. We came back down and had a little bit of a loss overall. So I'll just say, just to guesstimate, a negative 0.5% loss. I'll just throw that number out there because I know people, it'll vary between, how much partials you've taken and where you put your stop if you didn't take the stop level. So let's just say an average of 0.5% loss. That's what I took on this trade. So had a net loss on AUD CAD, USD Chef again. So now I'm going back into this trade that we took. So this trade was a playoff of all the other ones. Well, at least this one. So we had our entry here originally, right? We distributed in price and we made our lower low. So the distribution schematic, along with the newfound supply zone that we created, lower low, lower high, right? Supply coming into supply, this newfound supply. Distribution, another added confluence, lower low compared to this low. So now we want to pull back. Don't want to take out this high here because that would be breaking structure. We came up into that level, and that was the other screenshot that I had talked about with Euro USD. I talked about sending the screenshot to the hindsight group with this level here, and this correlated very well with the USD Chef sell. USD Chef sell right here at this level. Go back to the 15-minute. USD Chef sell at this level here. This happened during London session. I wasn't up at the time, but then what we saw was the reaction buy to sell, and then we had that lower low compared to this low here. So we wanted to pull back up into our last buy to sell imbalance fill here, 93.233, hit it to the exact T, and then we fell all the way back down, created equal lows, hit take profit 1, just shy of take profit 2 at 9250. Then we had our end of week reversal, so just a slight pullback to finish off the week. I do expect price to continue. I'm not sure if we will hit break even. I'm assuming it probably will hit break even on Sunday or Monday before continuing down, but overall we should continue down to 92.50 and then 92.15, which is our overall take profit level because of our last point of demand here with the imbalance that we talked about a little while ago. Let's see, I have 3 more that I'll do really quickly. Okay, Euro NZD is next. Euro NZD. So this was the Euro NZD trade that we actually deemed invalid. This was during Asian session when it was approaching this level here, and we didn't want to get into it. So that I will delete. If we actually held that limit, you would be up in profit a lot. But anyways, the Euro NZD position I'm talking about is here. So lower low is formed, lower high, lower low, lower high, lower low. Again, just like Euro AUD, we're in a triple-leg state, very, very strong to the downside. NZD AUD, very strong this past week. So we wanted to play off of the last supply zone, also imbalance after that lower low is formed. We had a lot of liquidity here. We had equal highs. So that's another drawn liquidity that we wanted to come into. We had the fake breakout here. We can see the higher highs, higher lows, higher high, higher low. Then we had the sell-off. People tried to sell in here, I'm assuming. Right back up, swept these stop losses for these equal highs. Liquidity came into our entry perfectly and had our sell-off. We didn't break lower low, so we didn't put stop to break even yet. But nonetheless, hit take profit 1. We secured some partials. Price did actually come all the way back up, trickled for a little bit more, came back into drawdown, further into supply, didn't hit our stop loss, and then continued back to the downside and broke overall structure and taking all of this ascending liquidity. So a lot of clues in the market for where price is going. Now stops can be put at break even or even just above this high if you want, for those of you who are in this trade. But we have broken overall structure. We should be continuing down into our overall level at 1.57 for a nice 1 to 4 risk reward. Currently floating on this trade 2%. So next one, Euro USD. Euro USD, this trade was absolutely phenomenal. This trade is a 1 to 32 risk to reward. I do think that price will continue up next week because we have equal highs, and we really should be coming into 1.11 and 1.12 to make that overall higher high. However, you can see here that we are forming a nice trend line liquidity here. So that could be run, which would be unfortunate for our trade. But nonetheless, our stops are at break even on all of them. So I don't really care. So what we talked about before, we had our original reaction from our 5-minute or 15-minute demand zone. We had our 2 entries from these 2 levels, 1, 2, came up into them, and we came down a little further than expected into a 5-minute demand zone, creating another 5-minute demand zone here to show you guys. Creating another chop, chop, chop consolidation, 1, 2, 3, 4 doji engulfing. Demand that came into demand, deemed that necessary because of the counter trend breakup structure. We also formed equal highs and equal lows right in here. We were accumulating in price, building up orders for that last violent. You can see all these little tiny candles, and all of a sudden, bing, strong move, bing, strong move back to the upside. That's why you'll see a lot of volatility around key areas, which is why it's difficult to play off of candlestick formations and patterns, meaning waiting for a, I don't know, whatever you got retail traders look at, bullish engulfing. I mean, by that time, you're too late to the market. If you don't know where you're supposed to be getting into, you're going to be too late, and your risk to reward is going to drop significantly. Hence why I keep saying retail just doesn't work, period. So demand zone, met, entry here, stop loss, 0.9640. At one point, we were up about a 1 to 10 risk to reward on this, and then formed equal highs, and then unfortunately we had our sell-off to end the week. So we did get hit out break even here on this trade. We'll probably get out break even on this trade, but nonetheless, we are securing partials as we go. So in total, with this Euro USD position, we hit take profit 1, secured a little bit more partials up here. I actually did at 1.1030, which is right here before the prior high. I am currently up only 3% on this total, but we were up 10% on this, I think 2% on this, and 3% on this trade. So we were up quite a bit when price was up here. That's just the power of high risk reward trading, is it gives you those opportunities. Even if you lose, that's the thing. 1 to 32 risk reward, I could lose 31 trades in a row, hit a 1 to 32, and be in profit. That's just the power of risk reward. You don't have to have a high win rate. So that's the thing. It's like, even though we do have a high win rate, which is just even better with high risk reward trading, people, I could say, oh, I have a 10% win rate. Obviously, that's not the case. I have about a 70, 75% win rate. But I could say, oh, I have a 10% win rate, and people would say to me, oh, that's terrible. Then I could say, oh, well, yeah, I'm overall very profitable. They could be like, oh, that's impossible. Well, those people really don't understand how trading works, because they're only focused on the pips or the win rate, when they're not really focusing on the question that they should be asking me is, what's your percent return? What is your average risk to reward? Percentages, not numerical value, not pips. Percentages is what makes money. I promise you, it's how the world works. So, reaction from that level, broke countertrend structure. Unfortunately, we did come back down, still 3% on this trade, looking for take profit overall at 1.12 psychological level, and that supply I talked about over to the left, which is actually one drive, two drive into the third drive high here. So if we do get lucky and price does continue, then huge trade for the guys and girls, the FP members. So currently floating here. I'm sure we'll run out these equal lows to start, but if we do come back down to break even, oh well, we did secure some partials. That's why securing partials is so important. So important. So you don't take a winning trade to a losing trade. Secure some partials, don't be too greedy, and let it go. Because I'm telling you guys, if you didn't secure partials up here or anywhere here, you'd be kicking yourself when price comes back down here. All right, last trade that we took was a gold trade. This one, again, was kind of like just continuations with demand zones. Higher high, higher low. We formed a higher high. And just intraday continuations. Wasn't for a huge trade, only for a 1 to 2. Not the best risk to reward in the world, but still nonetheless worked out for us. Descending liquidity coming into the level, kind of flagging a little bit. Let's see, I'm going to the 15. I wasn't the one who sent the signal out. This was one of my business partners. So I'm kind of doing the analysis as I see it here. It's really just coming down into discounted regions of price after the higher high was formed. So higher high, higher low, higher high, higher low, higher high. So just looking at continuations from demand zones here. Had the entry from psych level 1950, stop at 1937.50, which was the prior low here. Just looking for overall continuations for 1 to 2. Take profit 1 is 1965. We are in a little bit of profit here. I think I put 0.7% profit. Yeah, about 0.7%. So if you total everything up, it adds up to be 24.5% for the week. However, I know you guys are probably wondering, well, you guys took partials here. It's not the full position that's moving in the direction. That's true. That's very true. It's a very good observation. So I'm going to say that our overall percent return for the week was not 24.5%. If you took it raw, meaning if you followed all of our updates to the T and didn't take partials and waited for the overall position to be hit, 24.5%. If you did take partials, which is smarter, I'm telling you it's smarter in my opinion, you would have hit about 15 to 20% this week. So still phenomenal return this week. 15, 20%, that's probably our average for the month. But yet we did it in 1 week. So I'm saying not every week is going to be like this week. This was a very phenomenal week. We had a lot of opportunities that we took advantage of, especially when the markets are in this trickle-like state. It's very easy to take advantage of these setups. So we're going to continue to kill it next week. Obviously, quality over quantity is our number one priority. Preservation of capital. Make sure you're using risk management at all times, guys. I don't care if you're losing a million trades in a row or winning a million trades. Risk management every single time. If you follow the updates within our VIP service, take every single trade that we send out on the exact risk we tell you to, whether it's half risk or full risk of 1% each trade, splitting up your positions, taking partials at the designated zones that we send. You are going to be overall profitable with us. I promise you, you will. we have seen it since we started Ariel Fx back in 2020. So a phenomenal week, guys. Congratulations to all you VIP members. Hope you guys learned something. For those of you who are not in VIP and just wanted some value, hopefully you learned a little bit more of how we trade and how we break down charts, what we look for in terms of confluences and entry points. So if anyone has any questions, feel free to ask. Questions are free. Obviously, I'm happy to answer as many questions you guys have. I want you guys to learn this material. This is such valuable stuff. So please feel free to message us on Telegram at Ariel Fx Trading. We have our IG at Ariel__FX is double underscore. We have our website, arielfxtrading.com, and then our Discord we can drop in the description below. So thank you so much for everything, guys. If you have any questions, as always, please feel free to hit us up. We'll be happy to help you. Enjoy the rest of your weekend. We'll come back strong on Monday for another great trading week. Take care.